Are you a business owner? Did you know about this new regulation that could impact millions of businesses across the US? If you are unaware and if you miss this information and its deadline, the penalties can be severe. I am talking about beneficial ownership information, BOI filing, something every business owner needs to understand. But what is it? Who needs to file it? And why should you even care? In today's video, I will be breaking down everything you need to know about BOI filing, the recent legal developments, and whether your business is affected. Stay until the end of the video to get the latest update on the BOI filing. Let's get started. First of all, let me explain it to you what BOI is and why businesses are required to file it. BOI stands for Beneficial Ownership Information. This reporting requirement was introduced under the Corporate Transparency Act (CTA) passed in 2021 by Congress on a bipartisan basis. This law requires businesses to report who owns and controls them. BOI reporting is managed by the Financial Crimes Enforcement Network, a branch of a Treasury Department. This is a part of the US government's effort to make it transparent and harder for bad actors and criminals to hide their money or illegal activities by using fake companies or complicated ownership structures. Knowing who owns and controls a company makes it harder for bad actors to hide behind the shell companies. This protects legitimate businesses and strengthens the financial system. So, who's on the hook for this? I mean, who needs to file this report? Most small businesses, including LLCs, corporations, and partnerships, are considered reporting companies under this rule and have to file the BOI report with FinCEN. Essentially, if you have registered your business with the state, chances are you need to file, and you can do the reporting at the FinCEN's website for free. Now, let me make it clear what reporting companies are. Companies required to file the BOI report are called reporting companies. There are two types of reporting companies: domestic and foreign reporting companies. Domestic reporting companies are corporations, limited liability companies, and any other entities created under the state law by filing of a document with the Secretary of State or similar offices in the United States. Foreign reporting companies are entities, including corporations and limited liability companies, formed under the law of a foreign country that has registered to do business in the United States by filing of the document with the Secretary of State or any similar offices. Now, let's move and talk about where someone can file the report and the deadline for filing. FinCEN has launched the BOI e-filing website for reporting beneficial ownership information since January 1 of 2024. The link for the filing is provided on the description below. When it comes to the deadline for filing, a reporting company that is created or registered to do business before January 1 of 2024 have until January 1 of 2025 to file its initial BOI report. Similarly, a reporting company created or registered in 2024 will have 90 calendar days to file after receiving the actual notice that its creation or registration is in effect. Likewise, a reporting company created or registered to do business after January 1 of 2025 will have 30 calendar days to file after receiving the notice that its creation or registration is in effect. You may be wondering whether all businesses need to file this. And the answer is not every company needs to file. Some businesses are exempt from filing. There is a list of 23 types of entities that are exempt from the BOI reporting requirement on the FinCEN website. This entity includes publicly traded companies meeting specific requirements, many nonprofits, and certain large operating companies. The list of the 23 types of entities are as follows. talk about sole proprietorship and whether they are a reporting company to file the BOI report. The answer to this question is no. If you are a sole proprietor and you have not registered your business by filing a document like the Article of Organization or the Article of Incorporation with the Secretary of State or a similar office, you don't need to file a BOI report. You may have just filed a document with the government agency to obtain like an EIN number, like an employer identification number with the IRS, or get a DBA name, or apply for a professional or an occupational license. This filing does not create a new entity, and therefore it does not make it a reporting requirement company. So this type of sole proprietorship who have not registered the business are not required to file the BOI report. But if you are a sole proprietor who has filed with the state an article of organization are considered to have an LLC, then you might have a BOI filing requirement. Now you may be wondering, what about S corporations and partnerships? S corporations and partnerships generally need to file unless they fall under one of the exemptions we talked about earlier. S corporations and partnerships are treated as a pass-through entities by the IRS under the tax law of the Internal Revenue Code and are considered to be a reporting company, which means that the S corporations and partnerships are created or registered to do business by filing a document with the Secretary of State or similar office. They must comply with the reporting requirement and file the BOI report to FinCEN. So, who is the beneficial owner of a reporting company? A beneficial owner is an individual who either directly or indirectly exercise substantial control over the reporting company, or who owns or controls at least 25% of the reporting company's ownership interest. Because beneficial owners must be an individual, that is, a natural person, trust, corporations, or other legal entities are not considered to be beneficial owners. Now, you may be wondering, what is substantial control? An individual can exercise substantial control over a reporting company if the individual is a senior officer, like the company's president, chief financial officer, general counsel, chief executive officer, chief operating officer, or any other officer who performs a similar function. Also, if the person who has the authority to appoint or remove certain officers or a majority of directors of the reporting company has a substantial control over the company. Also, if the individual who is an important decision maker of the reporting company also has a substantial control over the company. So what information will a reporting company have to report about itself? A reporting company must provide its legal name, trade name, like doing businesses or a trading as names, principal business address in the United States or the address for conducting U.S. businesses if based outside of the U.S., jurisdiction of formation or registration, taxpayer identification number, or a foreign tax identification number and its issuing jurisdiction if no EIN is available. The report must also indicate whether it is an initial filing, a correction, or an update to a prior submission. Next, what information will a reporting company have to report about its beneficial owners? For each beneficial owner, a reporting company must provide their name, date of birth, residential address, identification number from an acceptable document, example a passport or a US driving license, and the issuing jurisdiction. Now, you may be wondering if you are supposed to file the report every year. Well, you don't have to file it every year. There is no annual reporting requirement. Reporting companies must file an initial BOI report and update or correct BOI reports as needed. If there is any changes to the required information about your company or its beneficial owners in the report that your company filed, your company must file an updated report no later than the 30 days after the date of the change. Now, let's talk about the penalties. Penalties can be severe if you do not file and do not meet the deadline. According to the Corporate Transparency Act, a person who willfully violates the BOI reporting requirements may be subject to civil penalties up to $500 for each day that the violation continues. However, this civil penalties amount is adjusted annually for inflation. As of the time of making this video, the amount has gone up to $591 per day. A person who willfully violates the BOI reporting requirements may also be subject to criminal penalties of up to 2 years in prison and a fine of up to $10,000. Violations include failing to file, submitting false information, or not updating or correcting previously reported information. Let's dive into the recent legal developments on BOI filing. Recent legal challenges have significantly impacted the enforcement of beneficial ownership information (BOI) reporting under the Corporate Transparency Act. Earlier in March 2024, U.S. District Court of the Northern District of Alabama found the CTA unconstitutional in the case of National Small Business United versus Yellen. This ruling, however, applied only to the plaintiffs involved, including the National Small Business Association and its members. However, a federal court order has temporarily suspended the enforcement of the Corporate Transparency Act and its beneficial ownership reporting requirement. The ruling, issued on December 3rd of 2024 in the case Texas Top Cop Sup Inc. versus Garland, suspended all deadlines for BOI filing compliance nationwide. While the Department of Justice has filed an appeal, Financial Crime Enforcement Network will follow the court order, meaning reporting companies are not currently obligated to file the beneficial ownership information and will not face any penalties for not filing the report during this period. However, voluntary submission is still accepted by the FinCEN, meaning you can still file the report at your own will. The CTA aims to combat financial activities such as terrorism financing, drug trafficking, and money laundering by creating transparency and fairness in all the financial system. The litigation around the CTA and the BOI reporting is ongoing with the different decisions in different jurisdictions. So what does it all mean to your business? These legal changes have made the future of BOI reporting unclear. For now, businesses don't have to report their beneficial ownership information due to the court order. However, since the decision could be overturned on appeal, businesses should stay updated and ready to meet the compliance requirements if they are reinstated. The BOI filing requirement marks one of the most important changes to business reporting in recent years. While the enforcement is currently paused, staying informed now is crucial. By understanding the requirements and being prepared, you can save valuable time, avoid unnecessary expenses, and reduce potential stress when compliance is reinstated in the future. Remember, proactive planning today ensures smooth operations tomorrow. Don't forget to like, subscribe, and turn on the notification bell icon so you never miss important updates on BOI and other key businesses topic. If you have any questions, drop them in the comments and I'm here to help. Thank you for tuning in, and remember, stay informed, stay prepared, and stay ahead.